Hey everyone, and welcome back to the channel. If you're new here, we break down the best books on finance, business, and personal growth to give you the wisdom without the reading time. Do me a quick favor and hit that like button, share this with a friend who needs it, and definitely subscribe so you don't miss out on our next video. It really helps the channel out. So let me ask you a question. Does investing feel complicated, scary, or just plain overwhelming? Do you hear terms like asset allocation, market timing, and stock picking and just want to tune out? If that's you, you are in the right place, because today we are diving into a book that cuts through all that noise, The Simple Path to Wealth by J.L. Collins. This book started as a series of letters from the author to his daughter, which I think is just the coolest origin story. He wanted to give her a straightforward, no-nonsense guide to building wealth that she could follow for her entire life, even if he wasn't around to advise her. The result is one of the most powerful and, dare I say, simple finance books ever written. The core message of the book is this: financial independence is more achievable than you think, and the path to get there is surprisingly simple. Collins demolishes the idea that you need to be a financial wizard, a stock market genius, or pay hefty fees to so-called experts to build wealth. So what's the big secret? It all boils down to a few fundamental principles. First, and this is the big one, spend less than you earn. I know, it sounds ridiculously obvious, right? But it's the absolute bedrock of wealth creation. Collins calls this living on 50% of your income, which might sound extreme, but the principle is what matters. The bigger the gap between what you make and what you spend, the more FU money you can build. What's FU money? It is Collins's famous term for having enough money in the bank that you can walk away from any situation you don't want to be in: a toxic job, a bad boss, a life you don't love. It's not about being rude. It's about having the ultimate freedom and control over your own life. It's the power to say no. That's the real goal of investing. Now, once you've created that gap between your income and expenses, what do you do with the extra money? This is where the simple path really shines. Collins argues against trying to pick individual stocks. He says, and I quote, "Most people lose money in the stock market. Why? Because they try to time the market, they let their emotions take over, they buy high and sell low. It's a loser's game." Instead, he champions a beautifully simple strategy: invest in a low-cost, broad market index fund. Specifically, he's a huge fan of VTSAX, the Vanguard Total Stock Market Index Fund. Think of it like this: instead of trying to find the one winning needle in a haystack, you just buy the entire haystack. By investing in VTSAX, you own a tiny piece of thousands of American companies. You're betting on the overall growth of the US economy, which over the long term has always gone up. Collins is very clear about this. You should be a passive investor. You buy the fund and you hold it. You don't sell when the market crashes. In fact, he tells a great story about the 2008 financial crisis. While everyone else was panicking and selling at a massive loss, he and his daughter just kept on buying their index funds, month after month. Why? Because when the market is down, your investment dollars are buying you more shares. It's like your favorite store is having a massive sale. You don't run away from a sale. You take advantage of it. He emphasizes that the market will have downturns. It's not a question of if, but when. These are not moments to fear. They are opportunities. Your job is to ignore the noise, ignore the scary headlines, and just keep investing consistently. This set it and forget it approach is not only more effective, but it also frees up your mental energy to focus on things you actually enjoy. Another major enemy of your wealth, according to Collins, is debt. He has a very straightforward view: avoid it like the plague, especially high-interest debt like on credit cards. He breaks it down very simply. When you have debt, you are paying someone else interest. When you have investments, you are earning interest. Which side of that equation do you want to be on? The answer is pretty obvious. He advises paying off any debt with an interest rate above 4-5 as aggressively as possible before you even think about investing heavily. Now let's talk about the two phases of your financial life: the wealth accumulation phase and the wealth preservation phase. During your working years, in the wealth accumulation phase, your goal is simple: pour as much money as you can into your investments, primarily those stock market index funds. You're young, you have time on your side, so you can afford to be aggressive and ride out the market's ups and downs. The power of compound interest is your best friend here. Every dollar you invest is a little worker that goes out and earns more money for you, and then that money earns even more money. It's a beautiful snowball effect. But what happens when you reach financial independence and you're ready to retire? You transition into the wealth preservation phase. At this point, you're no longer adding money to your portfolio. You're starting to live off of it. Does this mean you sell everything? Absolutely not. Collins explains the 4 rule. This is a guideline which suggests you can safely withdraw 4% of your total portfolio value each year, adjust for inflation, and have a very high probability of your money lasting for at least 30 years, and likely much longer. To make this phase even safer, he suggests adding some bonds to your portfolio. Bonds are generally less volatile than stocks, so while your portfolio might still be 75% stocks, that 25% in bonds acts as a cushion. When the stock market has a bad year, you can sell some bonds to cover your living expenses, giving your stocks time to recover. It's a simple strategy to smooth out the ride in retirement. So let's distill this down into some practical action steps you can take right now, inspired by the simple path to wealth. First, track your spending. You can't spend less than you earn if you don't know where your money is going. Use an app, a spreadsheet, whatever works for you, but get a clear picture of your financial life. Second, build your FU money fund. Start by creating that gap. Can you cut one subscription? Can you cook at home one more night a week? Every dollar you save is a dollar you can invest in your freedom. Third, attack high-interest debt. List all your debts, from highest interest rate to lowest, and throw every extra dollar you have at the one on top until it's gone. Then move to the next. This is the fastest way to get out of the hole. Fourth, and this is the core of the strategy, open an investment account and start buying a low-cost, total stock market index fund. Whether it's Vanguard's VTSAX or a similar ETF like VTI, just start, automate your investments so that every single payday, a certain amount goes directly into your fund without you even thinking about it. Start small if you have to. Even $50 a month is a fantastic start. The most important thing is to build the habit. And finally, stay the course. This is maybe the hardest part. The market will go crazy. Your friends will be talking about the hot new stock. The news will scream recession. Your job is to put on your blinders, trust the process, and just keep investing. The simple path is not always easy, but it is effective. So to recap the key takeaways: live on less than you make, avoid debt, invest the difference in broad, low-cost index funds, ignore the market noise and stay the course. Once you're ready to retire, use the 4% rule to live off your investments. That's it. That is the simple path to wealth. It's not about complex algorithms or risky bets. It's about discipline, patience, and consistency over a long period of time. This book truly is a gift. It removes the fear and complexity from investing and empowers anyone, regardless of their background or income level, to take control of their financial future and build a life of freedom and choice. I hope this summary has been valuable for you. The real magic, of course, is in applying these principles. I'm so excited to hear about your own journeys on the simple path. Let me know in the comments which one of these ideas resonated with you the most. Thank you so much for watching. Our next video is going to be a deep dive into another game-changing book, so you won't want to miss it. If you haven't already, please hit that like button, share this with someone who needs to hear it, and subscribe to the channel. We'll see you in the next one.